So you're probably wondering, should I buy a home now, or is it better to wait with Trump going back into the White House? Well, it's a great question, and one that could impact your decision in more ways than you probably think right now. So if we haven't met yet, my name is Ryan, and over the past 19 years, I've helped more than 3,500 home buyers make smart, strategic decisions about buying their next place. Now, Trump's presidency has already made waves in the markets, and those could affect everything from mortgage rates to housing demand. So in this video, we're going to break that down because while the headlines are filled with uncertainty, there are real opportunities here if you know where to look. So should you buy a home now or hold off? Stick around to the very end and I'll tell you what I think is going to happen in real estate in 2025. So first up, let's dive into market reaction. So when Trump won the election, the stock market actually saw a pretty immediate boost. So investors and traders who actually thrive on predicting market direction responded with a lot of optimism. So you could actually feel this shift in the air where people were starting to feel more confident about the future and what's going to happen next. So it's like the economy was saying, okay, let's go. Now, why does that matter to a potential home buyer? So a surge in market confidence actually indicates that people are willing to spend more and start investing again. So which can actually drive up demand for the housing market. So just think about it. When confidence is high, people feel like it's stable enough to start making financial moves and start buying stuff like houses. And it's not just the stock market. Consumer sentiment on how people feel about the economy in general also tends to improve when there's a sense of positive change happening. So if more people feel like the economy is moving in the right direction, more of them are likely to take the plunge into home ownership and buy other assets and other big purchases. So with more home buyers in the market, you can actually expect an increase in competition in 2025, and that will likely push home prices a little bit further up. So while a lot of people are watching interest rates and bond yields, this boost to market confidence can actually have a huge ripple effect. So if more home buyers flood the market, you might see homes selling faster and for higher prices. In other words, if you're thinking about buying a house, this could be the moment where jumping in sooner rather than later can actually save you money in the long run. So if you found this helpful so far, stick around to the end of the video and consider it an investment in your home buying education. Also, by hitting the subscribe button, you're helping the algorithm share this video with other home buyers who need the same support. So let's go ahead and pay it forward together. Okay, so let's go ahead and shift gears and talk about the bond market. When Trump won the election, there is going to be a noticeable shift in the 10-year Treasury yield. But what does it actually mean for you as a home buyer? Well, here's the thing. The 10-year Treasury bond is often considered the key indicator for long-term interest rates for mortgages. It's closely tied to mortgage rates, particularly the 30-year fixed mortgage. So when a Treasury yield rises, it's like a signal that interest rates are going to follow suit. So let's break that down a little bit more. So when Treasury yields go up, it usually means the cost of borrowing money is getting more expensive. Now, why is that? Because some investors want a higher return to offset the increased risk of lending over the long term. And since mortgages are a type of long-term loan, they tend to follow these shifts in the bond market. So what we're looking at here is a potential for higher mortgage rates in the near future. So you're asking again, what does this mean to me? So if you're planning on buying a home here soon, this could be an important factor. Higher mortgage rates mean your monthly payment could go up and you might end up paying more over the life of the loan. Even a small increase in rates can add hundreds of dollars to your monthly mortgage payment and sometimes can really add up over 30 years. So while the stock market boost might be an increase in consumer confidence and push up demand, the bond market's shift could actually make it more expensive to finance your home. So if you're ready to buy, this might be the moment to lock in a lower interest rate before these mortgage rates go up a little bit further. Now, timing is key in a market like this, and understanding these shifts can actually give you a huge advantage. Let's go ahead and shift into the heart of it, the impact on mortgage rates. As we've already touched on, when the 10-year Treasury yield goes up, mortgage rates tend to follow suit. Let's dive a little bit deeper into how this could actually affect you and your ability to buy it. So when mortgage rates rise, it actually directly affects the cost of borrowing money from a bank to buy that house. Now think about it. If you're looking at a home and locking in a 30-year fixed mortgage, that interest rate will actually determine what your monthly payment looks like for quite a while. If mortgage rates go up, so do your mortgage payments, and can actually make a big difference in how much home you can afford. So for example, if you're considering a $300,000 home purchase and the mortgage interest rates increase by just 1%, your monthly mortgage payment could actually go up several $100s. This means less room in your budget for other expenses, or you might have to lower your price range. Essentially, higher rates can actually reduce your purchasing power, but that's not all. Higher interest rates actually lead to a shift in the overall market. As borrowing becomes more expensive, fewer people might be able to afford homes at the current price level. So this could actually do the opposite of what I just said and slow the market down. But it could also create an opportunity for home buyers who are prepared to act now while rates rise a little bit further. So a key takeaway here is simple. Higher mortgage rates could actually mean higher monthly payments and reduced affordability. So if you need to buy a home here soon, now is actually a pretty decent time to pay attention to those rate trends. With the potential for rates to increase further in the wake of Trump's election, locking in a good rate sooner rather than later could actually save you a lot of money in the long run. So in the year following each presidential election since the 80s, there has been a consistently notable uptick in real estate activity. So while election years often bring uncertainty, especially as buyers and sellers wait to see these new policies that might be implemented, the market generally rebounds after the election results are in. So the post-election surge is actually a trend observed over the last few decades, and there's a few reasons why this happens. So after an election, especially when there is a clear outcome, market participants, whether they are investors, buyers, sellers, gain more confidence. This sense of stability typically leads to an increase in home sales and a return to market normalcy. So in fact, housing sales in the year following an election often rise significantly as both consumer and investor confidence tends to get restored. Additionally, any policy changes that come with the new administration can actually have a stimulating effect on the market, especially when it comes to mortgage rates and housing prices. So it really wouldn't matter if she won or if he won. This is an effect that we are all going to get to take advantage of. So the 2024 election is expected to follow similar patterns. Experts predict that after the election, home prices may rise due to the limited inventory and potential changes in fiscal policies, which actually can help drive or tamp down demand. So for instance, when rates drop or stabilize after an election, more home buyers tend to enter the market looking to capitalize on better financing terms. This phenomenon has been observed in the previous election years, such as 16, 20, and once again, going all the way back to the 80s, where after election periods, we saw a sharp increase in housing activity. So if you're asking yourself, should I buy now or should I wait? It's worth keeping in mind that real estate sales traditionally take off the year after every presidential election. With the potential for more clarity in policies and market conditions, it may be an opportune time to get involved post-election. So let's take a step back and pull it all together. So we talked about how Trump's win will be impacting the stock market, bond market, and mortgage rates, each of which plays a key role in shaping the housing market. So after Trump's win, we can expect to see a boost in the stock market confidence, which can mean more buyers are ready to enter the market, pushing up demand. Now, on the flip side, the bond markets react with rising treasury yields, and that often translates to higher long-term interest rates, which we're seeing could affect mortgage rates. So what does this mean for you as a potential home buyer? Well, if mortgage rates are on the rise, your monthly payment could increase, meaning your home buying power can actually shrink a little bit. With homes still in high demand, you can find it a bit more challenging to afford that dream home if rates continue to climbing. But there's a silver lining here too. While higher mortgage rates could cool off some market heat, it could actually present an opportunity for you to lock in a lower rate now before things go bananas. So if you're sitting on the fence about buying, now might be the right time to act before those rates make a bigger impact on your budget in 2025. So in short, Trump's win has set off a series of reactions that will affect real estate markets and other markets and mortgage rates. But remember, this isn't all bad news. It means you need to be strategic in staying informed and make your moves wisely. We're not playing checkers here. We're playing chess. So whether you're trying to buy now or down the road, staying on top of these market trends is essential to make the best financial decision for your future. There's so much more that you need to learn and discover on your path to buying your next place. So be sure to check out this next video, which will help you get closer to your goal of buying a home. So if you want to keep building on what you learned today, this next video will take you a little bit deeper into the strategies I give my clients every day. Make sure to check it out next. It's the perfect follow-up to help you get one step closer to buying your next place. Until next time.